And welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number 800-951-0592, the website at allamericangold.com. And welcome to Thursday. Big shout-out to all you podcasters out there. Spread the word. Get this message out to everybody. You know, it's crazy. Millions and millions and millions of people have downloaded this show. Truly humbled. Truly humbled. Thank you guys so very much. And the only way that happens, if you're getting out the information that is the right information. We try to do that for you every single day. I'm joined with my partner in crime, Jason Walker, who runs our Colorado Patriot office, and of course the 1360 KHNC, the radio station that we own up there. Shout out to Ramon and all the guys over at KXXT there in Phoenix, and wherever else you may be listening to this broadcast. We got a lot of things to talk about. I think the storm is coming next week. I think we're going to see, hate to say it, get ready for a major increase in crude oil prices. I'll tell you why we think that is going to occur. Inflation ripping apart. It's not just here. It's everywhere in the world. And then China. Man, incredible news out of China, essentially saying we're with Russia at all costs. Taiwan is absolutely belongs to China and pledges China just gobbling up Russian energy. Jason, this thing really is, it looks like both sides have dug in here.
Yeah, that's right, Joe. There's going to be tougher times ahead. We've been talking about this fall as being sort of a kind of a ground zero for things to really get serious. And let's face it, it's flu season. You never know where coronavirus is going to rear its ugly head in the news cycle. And you have wars and continued wars and ramping it up, and then of course, look at the economic cycle we're in. Raising rates and selling off balance sheets. It's all going to go towards China and Russia they're going to take advantage of this, right? That's what we're seeing.
Yeah, we've got everybody out. Jay Powell's going to talk to Janet Yellen, the head of the ECB, Christine Lagarde, the British Central Bank. A lot of fluff this week. Get ready for the realities. By the way, crude oil, 105, 106, starting to heat up. Not very good news. We had really bad inventory numbers here yesterday. Numbers out of Russia not looking well either. The sanctions have an effect. The Russian crude oil output falling. Libya. And again, this is things where, if this war wasn't going on, Libya having some problems, not a big deal. Their major pipeline down. Every single refiner operating pretty much at maximum capacity. Never in the history of the data have we had refining capacity operating at such a high level. In other words, when you do that, you know how it goes. You can only run at these levels for so long, and then, things break. And why do I have this horrible feeling they're going to break at the worst time? Just be prepared. Be ready. Again, this is why you tune in right here. By the way, some measures now, we're starting to get ready to hear this in a lot of places. Italy today telling all of its residents, all of its citizens, hey, turn off the air conditioner. Energy is going to be a problem. Germany, hey, let's cut back on the showers. Right? I mean, people laugh, right? Hey, I know you like to shower every day, but you know what? How about go back to the old once a week thing? This is how significant the power and energy crunch that's coming. And again, you're not getting this on the mainstream media and all of these other things. You watch Wall Street's going to act all surprised when all of these things happen. Don't be surprised. It is not only, it's not it might happen. It's going to happen, Jason.
You're exactly right. I had my conspiratorial mind working a little bit last night when I was talking to my wife. So a little later in the show, this is all planned. It's you know me, Joe. I know it's all rigged, and I think I know where all this false scarcity is leading to, Joe. I think I have a good idea. So we'll somewhere in the show, it's all going to come back. I believe, Joe. I think things are going to change, and it's going to be a very it's a painful change. It's a global economic reset, and when that happens, they want someone out there to be the hero, Joe. Someone's got to be the hero in the end of this thing.
Yeah, and again, remember yesterday. Zero hedge, and these guys are really good. They are really, really good. They are saying after the French elections that is when the embargo is going to kick in on Russian oil. That's a massive game changer. So something else already. Listen, it was already going to be bad. Why not just finish it off like Jason said? You got to create all of these shortages out there to justify what they're going to do next. And remember, the end goal of all of this has nothing to do with Russia and Ukraine. The end goal of all of this is to get that digital dollar, to get that federal bank digital currency so they can have maximum control over the citizenry. And the only way I know of avoiding it, call them Patriot Trading Group and getting that gold and silver put away. We'll be back right after the break. Physical gold and silver demand continue to skyrocket all over the world. Don't tell the paper market. Shh. Right. Well, we're going to pretend it's not happening. Oh, it's happening. The Perth Mint saying gold sales for the month of March, the third highest ever. By the way, just missed it by less than 9,000 ounces from breaking the all-time high, which just so happened to be March of last year. Silver sales, 24% higher in the first quarter of this year compared to the first quarter of 2021. Almost a record, almost 6 million ounces of silver. That's out of the Perth Mint in Australia. Every mint, it's the same story everywhere, Jason. Every mint, if it's not record sales, it's right near record sales. And really, if you really dig in and find out, what the mints will tell you is, well, if we could have made more, we could have sold more. In other words, hey, we probably could have had records. We just couldn't make enough.
Yeah, that's I don't fall for that, Joe. I just know it can be done. But now, when it comes to silver supply, though, if they don't have it, they can't make it. So we've been trying to get silver out there for how many months? And in the last 2 years, I remember, Joe.
It's been 2 years. We've been struggling with silver supply for 2 years, and we know, to Jason's point, we know here in the U.S. The U.S. Mint, for several years, minted 50-plus million ounces. Matter of fact, they did that as late as 2016. Here we sit going on 2 years of shortages. We have premium. I still can't believe it. You know, the first day I worked here at Patriot, retail price for silver was $1.25 over spot. That was what Eric was selling Silver Eagles for, which means, obviously, we were paying less than the $1.25. Now you're sitting here and you're talking about silver, which is right now, again, I always laugh when I look at the price because it's so ridiculous. The paper price of $24.65.
And there shouldn't be a shortage,
You
Joe.
can't buy a Silver Eagle anywhere in the country for less than $40-some, Jason.
Right. And I said there really isn't a shortage. Well, there can be a shortage, but what should happen is you let the markets do what they're supposed to do, and silver goes to $50 an ounce or whatever it is, to where everybody gets the amount that they're willing to pay that amount for. Because let's face it, Joe, silver's needed for industrial use.
We've been out there. We went out on the air last week. I'll pay you $34. That's almost $10. What? $9.35 over spot for non-toned silver eagles. That's what I'll pay you right now. You want to 800-951-0592. Like I said, I think one person. We had one person take us up on that offer. And really, all he did was trade it. He traded some of his silver for gold, but that was it. And I guess my point being, the U.S. Mint is only minting around 30 million ounces. But yet I know they can mint 50. Right? And this is what to Jason's point. So one of two things, and this is what I think. This is just my opinion. I think the global mints, we got the U.S., we got Canada, right? We've got Australia, Austria, the U.K.'s got a mint, China's got a mint. There's mints out there. They've been told, hey, listen, don't run at capacity. I mean, right now, in the United States, Silver Eagle production's at about 60% of capacity. And I got to believe they're telling them that because, hey, by the way, if all of you start running at capacity, the available silver at the exchange, we're not going to have enough. That's the only thing that makes sense to me, Jason.
Yeah, that makes complete sense. And like I said, however many the mint is going to create for that year, doesn't really matter. What matters is the price per ounce relative to the market, and it's not right. This is why we're talking about $15 over spot for Silver Eagles. Well, that's where it has to be, because that's bottom end where silver should be selling anyways. If they would just let it, if we had, didn't have a central bank and powers that be monkeying around with the economic system, Joe, I believe we'd easily be at $50 to $100 silver. And then people that need it for investment value, they can buy it at that price, and it'd be a fair value. So it's very cheap to get it right now. And what sucks, Joe, is everyone wants the price to be where it should be. I guess we just have to wait until those that control things, allow under the next emergency for the prices to boost again. And the prices are going to be boosting. They've been boosting for a while now.
Yeah, absolutely. So just things to keep in mind. By the way, the U.S. Defense Minister, Secretary Lloyd Austin, this is kind of weird, had his first conversation with China's Defense Minister Wei, and I find that shocking that you guys haven't talked. What is this, 2 years plus of the Biden administration, and you haven't even talked to the Chinese defense minister? But on the phone, they talked on the phone yesterday, and China made it clear that no one can change Taiwan's status as part of China, and that that essentially, hey, China's as part of our country, we can do as we see fit, was the message from the defense minister. At the same time that was happening, China reiterated on Wednesday that it will continuing to strengthen its strategic ties with Russia, no matter how the international landscape may change. China is going to continue to strengthen strategic coordinations for a win-win cooperation. That was China's Vice Foreign Minister Li. That was out yesterday. China said that there's been a 30% increase in trade between the two nations in the first 3 months of 2022. And then right after that announcement came out, Russian coal shipments shipments between Russia and China for coking coal doubled in the month of March. So they went from about 550,000 tons a month to now 1.4. God, that's almost triple. 1.4 million metric tons of coal. So it looks like China and Russia have firmly joined together. There is also talk about the other BRIC nations, Brazil and India, who have continued to increase their purchases of Russian energy products. And then, of course, Mexico, Saudi Arabia, and South Africa, all of them refusing to bow to U.S. pressure to back off of Russian currencies. Jason, it's on.
Yeah, they've in the light of the news cycle and the decisions of these countries, what you've just described, it's us versus them versus us. They've made it really loud and clear that there's a situation of Russia, China, the BRIC nations versus the Western, the European, and the United States powers. This will continue to get worse and worse for everybody that's a citizen of these countries as they lower the standard of living, the inflation gets hot, and Joe, I mean, supply lines breaking down, all the food shortages, all this stuff we talk about, it'll just get worse and worse. And I believe they have a plan to, sort of quasi fix it somewhere in the future. And when they do that, I think China ends up looking really good. I think China is going to play this hero. They're going to play the businessman, getting in between the two angry parties that are against each other. Because let's face it, Joe, we don't control where the economics is going. But if there needs to be suddenly a great fix to all of this in the future, China could just come in just like a conquering hero. It's like, oh, here's all the ships you need. You got all the warehouses to put our stuff in. All your supplies are fixed. The inflation's been fixed. Costs are going down. I really believe in the future, Joe, that's where we're headed. We're going to see a fix. I don't know if it's this year or before the presidential election in 2 years, but we're going to see this thing, quote unquote, get fixed. It won't be fixed. We'll have digital currency. We'll have less freedoms and liberties, lower standard of living. But Joe, let's just say we're 20 to 30% inflation in the next 6 months to a year. If they get that thing down to 5% annually, well, yeah, man, I'll take that, man. Thanks, Joe Biden. You did the big deal with China. They're with us again. They're not just with Russia. They're playing the smart business end of this. They're going to work with America and they're going to work with Russia. That's how I see, Joe. I see the future. China being this hero. Quasi-hero position of, hey, they're the only sensible guy in the room. They're not attacking Ukraine. They're not smashing sanctions upon their perceived enemy. They're just trying to do business, Joe. Yeah, they're just doing the best they can to make their country work. And man, they work to deal with Biden or whoever's in charge, and they're going to fix it. And I don't know if that's this year, next year, or the presidential election year, Joe, but it's going to happen. And the so-called fix of this thing is going to be when everything is really blown to bits. That's how they're going to do this, Joe.
Yeah, and Zero Hedge reiterating their belief that the EU, after the results of the French election this weekend, that they're going to announce further cuts in the oil, Russian oil. This is going to make oil extremely expensive. Oil's been in a $10 range, really. Between like $98 to say $108. Right now it's at $105. And you got to remember, the only reason it's not higher right now is China's got 150 million people on lockdown. Those lockdowns are starting to end. I just saw Shanghai, 4 million people got to leave their house for the very first time in weeks. But again, remember, let me bring this to light. The spread between turning crude oil into gasoline and or diesel, they're saying is the highest level on record. By the way, they've been keeping these records since 1986. So what it's saying is refiners now are making $45 on refining a barrel of crude oil and turning it into gasoline or diesel. So they're running all out. As I said earlier, this is U.S. refiners are running at 94% of capacity. That is the highest rate on record going back decades. In other words, they couldn't find, there's never been a time at this time of year where U.S. refiners are operating at this high of a capacity, and they're saying the problem is, even with them making $45, they're making record profits, they still can't make enough, Jason.
Yeah, and keep saying it's false scarcity, Joe. And I'm going to go back to China one more time. Look how brilliant China will look if they're locking down major cities to combat coronavirus. Let's face it, Joe. Next time you get on an airplane, you're not going to have to wear a mask. What if the so-called corona narrative comes back in October? Well, China was doing the responsible thing. What was America and Russia doing? They were just letting all their people run around and cough on each other. I mean, think about it, Joe. Let's just think about how this is really going right into China's benefit.
800-951-0592, Patriot Radio News Hour. And again, we're just trying to get the news out there to get you into the mix. And we're watching the Bank of Israel now. Man, they're adding 4 new currencies
I saw that.
to its FX holdings, Jason. And of course, they're going to be reducing exposure to the dollar and the euro and adding exposure to the Chinese renminbi. In 2020 and 2021, the Bank of Israel held 0 Chinese renminbi. Now, in this graph that I'm seeing, their target, they are definitely going to be adding renminbi in 20. Well, let me tell you, prior to this year, the Bank of Israel held dollars, euros, and a little bit of the British pound. The target by the end of 2022, they're going to drop U.S. dollar holdings, and I've got to guess here, just because it's a bar chart. Looks like, if I was to guess, 10% or so. The euro, they're going to cut the euro. Looks like by almost 50%. And then they're going to be adding a little bit of Japanese yen, which is kind of funny because we were talking about the yen yesterday. A small amount of the Canadian dollar, then the Australian dollar, and the Chinese renminbi. And speculation is, Jason, that a lot of other countries are going to be following suit here. And I agree with the Israel position, because this is how I see it shaking out. I think the euro is going to lose the most ground. The dollar is going to lose the second most ground. And you're going to see pretty much a vast majority of what I'll call the other countries of the world that aren't the EU and isn't the United States adding the renminbi as part of their currency basket.
Absolutely, Joe. And when you see countries doing this, sort of fortifying their currencies.
And listen, this is Israel, one of our closest allies.
Well, you could say that, I guess. I have a different take. That'll be another show. But no, I get. That's how the world perceives. America and Israel, we're tight. But I think a lot of countries are going to diversify their currencies, their holdings, because, Joe, there is that distinct possibility that when this thing goes down, I see a possible temporary link to gold for the currency, gold-backed currencies of the world, just for a small time. When you change and reset the global economic table, so to speak, sometimes you need a stabilizing factor, and that could be gold. And I think that would be short-lived, Joe, less than 5 years.
Again, remember, speak to your point. Let's go back to 1933. right, when they took the gold from the citizenry. They melted it down and put it in Fort Knox and said the dollar's backed by gold. And then they, to Jason's point, they made it illegal for the citizenry to own gold for over 40 years. Well, for almost 40 years. And the funny part was the only people that could own it were the ones that owned the collectible coins, which, once again, going back, why do we like the old gold versus the new gold? Because the old gold has been reclassified as collectible. To Jason's point, will we see a similar situation unfold by going to a new currency, this digital currency, and to, as Jason said, hey, for a while, they're going, nations are going to back it with gold, and are they going to back it with gold, for 10 or 20 or 30 years? Because, the bankers will eventually keep working their way to getting rid of that. Very, very a scenario that has got to be, when you look at this, one of the leading scenarios out there of what is possibly is going to look like, Jason.
Yeah, backing up a worldwide digital currency with gold to start is a great way. I mean, Bitcoin, for example, has a certain amount of coins, but then you can almost divide it up for infinity, but there is only so many of them. So if you have a digital currency and you back it by gold, and all these countries seem to be rebalancing their gold holdings suddenly in the last 10 years, Joe, it makes a lot of sense. And then, like I said, it won't last that long. It'll be short lived, but it's just to stabilize maybe the madness and craziness that's coming.
Let's give the most current example.
Russia
just did it.
They put their toe in the water, didn't they, Joe?
They just did it. So remember, at the start of the war, here comes the sanctions. The ruble just gets clobbered. I mean, they literally wiped out like 90% of its value in the course of like a week. Russia makes an announcement. And it was I want to say it was like the last week of March. Maybe the second to last week of March. We are now backing the ruble with gold, and they put a price on it. A gram of gold for 5,000 rubles. That was the price. And they said that they would be buying gold, grams of gold, for 5,000 rubles all the way through the end of the summer, through the end of June or July, or I think it was July, through July. In a matter of a couple of weeks. At the time, by the way, just to give a little more perspective, at 5,000 rubles, that would put the price of gold at just over $1,600. Of course, right now, gold at the time was $1,900. The ruble immediately strengthened. Matter of fact, it came all the way back. It was actually stronger than when the invasion started, to the point where the ruble got so strong at 5,000 rubles for a gram of gold that would have put the gold price at well over $2,000 an ounce. And Russia had to say, okay, we're taking that off. We're ending it early, because obviously they knew, wait a minute, everyone's going to sell us gold at $100+ above spot. But it gives you the idea of how the world perceived the strength of their currency the second it got backed by gold, Jason.
Yeah, they put their toe in the water and it was just a little too hot, huh, Joe?
Just a little bit. It was on fire. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour. This is the last day here. $10 liberties at $1,150 at 800-951 0592. I'll sweeten it a little bit. You buy 20 or more, take them down to 1140. Robobank out with a note to clients talking about the rally on the U.S. stock market. Remember, yesterday the Dow was up pretty big. It's up another 100 points today. They were like, yes, apparently these housing starts did the trick. Of course, remember yesterday I was telling you, the fake news. He goes, yes, a 0.3% rise rather than a 1.6% decline that was expected. And they, of course, they noted that the starts of single-family homes, the American dream, were actually down another 1.7%. And it was the huge jump in apartments, i.e. multifamily units, up 7.5%, that did the trick. And they were kind of just poking fun at how far out of touch. Of course, Wall Street's always out of it. Wall Street's only in touch with what the central bank does. The latest New York Federal Reserve survey, so again, the New York Fed, found that only 43% of renters believe they'll ever own a home. That is the first time in the history of the survey that it actually is below 50%. Go back to the housing crash. All those people that lost their homes and turned into renters, even then, they still believed they would own a home again. Jason, this is the underbelly of what's really happening in America today.
Yeah, that's depressing. And I'll say this, Joe, I actually believe that will turn around in the future. Like, once again, a global economic reset. But when it turns around, Joe, you're going to be more enslaved to your debt and more enslaved to your mortgage. That's the only way they're going to get people to buy homes in the future. I see it happening. Joe, I was at a car dealership yesterday. I won't say which one. I don't want to cause any flack, but remember last year and this isn't homes, but cars, homes. It's like the next step down. Used cars were the number one asset out there in 2021. The inflation on used cars was outrageous.
Yeah, in the 40+%.
Yeah. Now remember, I was like a week or two ago about how the car dealerships are getting around some rules, because there's some rules when the manufacturer sends you a car, you have a sticker price, and you can't gouge the customer. You have to be within some range of price, right? And so what they do, it's crazy, Joe. What I saw yesterday, you have to sell the cars within a range, and when you have used cars, you can set your price. So car dealerships, and I think this must have started more than a year ago, Joe. They got savvy, and I think it's so blunt what they're doing. It's so widespread that I think that's why the used car prices went up. It's what they did is you sell your used car from your dealership to another dealership, let's just say $2,000 markup or whatever, and then that dealer immediately sells it back to you. No, you sell it to them for sticker price. They sell it back to you for like $2,000 more as a used car. The car hasn't gone anywhere. It's not doing anything. But now you can sell this essentially new car that hasn't been driven for like $8,000, $10,000, $15,000 more, Joe. So I was actually getting a car serviced, and my wife and I were walking around, Joe, and you know what we're seeing? Every single used car is for sale, ready to go, and every single new car had a sold sign on it. There was not a single. You could not buy a new car at all. Not forbidden. Can't do it. But there was a nice fresh batch of brand new looking used cars ready to go. See, Joe?
Brand new but used.
Yes, Joe. That shows you how bad the inflation is.
This car, it only has
it has
42 miles on it.
It has 0 miles on it, but it's used.
But they probably pay a guy, right? Hey, go drive this around the block 10 times, and then go get this next one, right?
Joe, they don't even have the wrappings off these cars. You know how they when they ship a car, it's wrapped up so you don't get any dings or scratches on it. They're still wrapped and they're sold. sitting there. Nobody's taking. No one's taking possession of them. It's and here's the thing. I don't think it's. I don't know why a car dealership should be hampered into what they sell the car. They should be able to sell whatever they want. But for whatever the rules are the rules. And this is how they've gotten around
yes,
because
they've been warned to not sell it above manufacturer's,
yes.
Suggested. You used to take, okay, the manufacturer says 60,000. All right, well, you're going to pay, 55, 56, something like that, right? That used to be kind of standard operating procedures. And now, of course, that's out the window. And to Jason's point, this is how they're getting around it. Hey, we're going to sell it to, and these car dealers, they own multiple dealerships, and they fake sell it to the other dealer, one of their other dealerships, and then they buy it back as a used car, and there you go, and that's how you get around it. And let's look at real inflation right now. According to our government, wages are going up, and this is huge, about 4 to 5%. Now they admit to 8.5% inflation. So that means real wages, you're losing, let's just say you're losing 4%. In other words, you're 4% poorer, even though you got a 4 or 5% raise. But the problem is actual inflation is probably closer to 20%. This is the biggest drop in real wages in American history. Yet Wall Street thinks it's wonderful. Patriot Radio News Hour, final segment coming up. 800-951-0592. Patriot Radio News Hour, final day. U.S. $10 Liberties at 11.50. Buy 10 or more at 11.40. Gold is down today. Again, remember, we have Janet Yellen, Jay Powell, blah, blah, blah. 1943, and again, like I said, we've had some profit taking this week. Buy as much of it as you can. Silver's down and nobody cares. Only thing that happens when silver goes down, the premiums go up. Absolutely nobody cares about the spot price of silver anymore. And again, silver, 2 to 3 week delivery time. We are paying $34 an ounce for untoned U.S. Silver Eagles. Right now, silver's $24.55, so silver's gone down a little bit more, but doesn't matter. Paying $34, so essentially now $9.50 over spot for untoned Silver Eagles. If you want to trade silver for gold right now, maybe not a bad idea. Yet we know silver's significantly undervalued, but it's been that way for years now. But again, the physical markets are a totally different animal. 800-951-0592. That is the number to call, buying or selling. We've got you covered here. And again, we're talking about inflation and really what's happening to real wages in the United States. And these are things that, you know what, these aren't, there's no hedonic adjustments, like they do with inflation. There's no substitution. Wages are what wages are, and you can't hide it. And what's happening right now is Americans are putting money on their credit cards at an all-time record high. And, Jason, we know this is kind of a zero-sum game. Once those cards get maxed out, that's it. And I think a lot of people are trying to hang on. Hey, if I could just go another month, if I could just get another, gasoline prices are going to go back down. Food prices are going to go back down. They're not. Matter of fact, I got bad news. They're going to get more expensive before it gets better.
Agreed, Joe. Agreed. And the inflation.
Credit card debt in February rose 21%. I'll be honest, I've never seen a number like that ever.
They stopped giving away free money, Joe. I mean, how are you supposed to keep your credit card bills down if you don't have the free money coming in, right?
Well, I guess the one good thing about the free money was a lot of people did pay their credit cards off. Unfortunately, that didn't last very long, did it?
And that actually doesn't help the bankers, because when you pay down debt, you actually destroy money supply. So that was kind of counterproductive to all that printing they were doing, Joe. They were wanting people to spend it to where they wanted to spend it, which is to increase their debt limits. So it didn't really help them out, So hey, there's this one thing, Joe. Did you see this thing? Biden standing in front of a picture of Teddy Roosevelt. I did
not see this.
We will speak softly and carry a large javelin while he's standing in front of Teddy Roosevelt's painting. And he's going to give another $800 million to Ukraine and another $500 million. $500 million.
$1.3 billion. What's funny is they admitted we don't even know what happens to the weapons once we give it. Once we send them over there, we have no idea.
That's kind of like Libya, right? We don't know what happened after we took that guy out.
Not real sure.